Okay, let's dive into something really interesting today. We're talking about India's instant mixed food category. And you know what? It's a fascinating, kind of baffling story of massive growth, tons of happy customers, and somehow a whole lot of financial losses.
So right off the bat, here's the big question we're tackling. How on earth can an entire industry just explode in popularity, with sales going through the roof, but still manage to lose money year after year? It just doesn't seem to add up, but that's exactly what's going on here.
And let's start with the good news, because wow, is it good. Over just the last 3 years, revenue in the instant mix world has shot up by an incredible 45%. People are just loving the convenience, right? They're buying up everything from instant poha to those ready-to-cook curry packs. But here's the paradox. For all that incredible growth, the category is actually operating at a negative 8% profit margin. Just think about that. For every 100 rupees of product they sell, these companies are losing 8.
And this chart really shows you the scale of that boom. You can see it right there. A steady, powerful climb in revenue year after year. This isn't just a flash in the pan. It's a real, sustained trend. The demand is absolutely massive.
But then you look at this chart and it tells the other, much tougher side of the story. While sales were climbing, the profit margins were always in the red. I mean, at one point dipping as low as negative 14%. So the big takeaway is pretty stark. Selling more stuff has not meant making more money. For a while there, it actually meant losing more.
So what's going on? What's the strategy here? Are these companies just okay with losing money? Well, to figure that out, we've got to look inside their playbook at what the management teams themselves are saying.
A huge part of their strategy is all about brand building. You see this quote from Bambino Agro. They know that having a strong, trusted brand is everything. In a super crowded market, you're more likely to pick a name you recognize, one you trust for quality. And that's a big reason people are switching from those loose, unbranded products. And you know, building that brand, it's not cheap. Companies like Jandawalas are being really open about their plan. They're in a pure growth phase. That means they are pouring money into getting their products everywhere, spending a ton on ads, and pushing into brand new cities and towns. It's a classic strategy, really. Grab as much market share as you can now and figure out the profits later.
But it's not just a fight between the big brands. Jandawalas points out a massive challenge here, the unorganized sector. We're talking about all the local players, the ones selling products in loose, unbranded forms. They don't have the same costs, so they can compete like crazy on price, and that puts constant pressure on everybody else's profits.
Now, a major engine for all this growth, and a key part of the whole strategy, has been the absolute explosion of e-commerce and quick commerce. It's totally changing the game for how these products even get to you. I mean, think about it. Companies are using platforms like Blinkit, Big Basket, and Amazon to get their products to a younger, more online population. And what's really important here is that these platforms let them reach markets they could never get to before, smaller Tier 3 and 4 cities. Suddenly, there's this whole new group of customers who want convenience and they can finally get it. All right, now we're getting to the absolute core of the profit problem. Let's talk about something called cost of material consumed. It's simple, really. It's just the cost of all the raw ingredients, the grains, spices, veggies, everything. For this industry, it eats up a staggering 83% of all the money that comes in. 83%. And here's the full breakdown. After that giant 83% chunk for materials is gone, you still have to pay your workers, keep the lights on, and run ads. The point is, there's just almost nothing left to call profit. The basic economics of making these products are just incredibly tight. So, given all that, the razor-thin margins, the intense competition, what does the future even look like? Let's break down the big hurdles this industry has to clear if it ever wants to become profitable.
It really is a tale of two sides. On one hand, you have these constant challenges, super high raw material costs, crazy competition from everyone, and not enough infrastructure like cold storage. But on the other hand, you have these powerful opportunities fueling all the growth, more people moving to cities, e-commerce reaching everywhere, and a huge potential for exports.
Let's drill down on those headwinds for a sec. The prices of raw materials, they're farm products, so they can swing wildly. The lack of a solid cold chain network makes it hard to distribute some products. And maybe most importantly, Indian consumers are very sensitive to price, which makes it really hard to just raise your prices when your costs go up. It's a tough environment. But there is another side to this. Let's flip the script and focus on the tailwinds.
These are the big, long-term trends that could actually turn this whole story around.
And the fundamental drivers here are really strong. As India's cities grow, life gets busier, and the demand for easy meal options just skyrockets. People have more disposable income, so they can afford these packaged goods. And outside of India, there's a growing global hunger for authentic Indian food. That's a massive export opportunity just waiting.
This quote from Jandawalas just hits the nail on the head. It perfectly captures what's happening. We're seeing a fundamental, probably irreversible shift in how people eat. They're choosing packaged foods because they promise quality, hygiene, and most of all, convenience. This is the giant wave the whole industry is riding.
And that brings us to the final question. The growth is real, you can't deny it, but so are the challenges. So the big question for the future is, can these companies innovate their way out of this? Can they find new ways to make their supply chains more efficient? Build brands that are so strong people will pay more, or create totally new products that change the profit game? Or is this exciting, booming category just going to be stuck in this loop of growth without any real gain? Well, that is the billion-dollar question, isn't it?